I'm Anastasia Amoroso, and this is Beyond 60/40. Today, I'm joined by Tikehau co-founder and CEO Mathieu Chabran. And then I sit down with iCapital country head of Portugal, Vanda de Jesus, in our international office here in Lisbon. And as always, I share the one thing that caught my attention this week in private markets. Let's get to it. In today's private market pulse snapshot, the one thing I'm focused on is the growth and state of private markets internationally. Since its inception in the late 1960s and early 70s, the alternatives market has undergone a remarkable transformation, evolving from its roots in the United States to eventually spread internationally. Today, private markets globally, excluding hedge funds, represent nearly 70,000 funds, which exceed $14 trillion in assets under management. That's about a 14-fold increase over the past 20 years. Now, importantly, the industry growth has been driven by expanding opportunities in non-U.S. markets. Indeed, Europe and Asia now account for nearly half of the global AUM. That's up from just 20% over 2 decades ago. Here are a few examples of this growth. In the UK, for example, annual private equity investments as a percentage of GDP have increased significantly, from just 0.5% of GDP in 2014 to around 2.5% recently. The share also grew somewhat in Europe, and in nominal terms, European GPs' assets under management grew rapidly and significantly. Elsewhere in Japan, private market AUM has doubled in the past 5 years, rising from $64 billion in 2018 to $128 billion in 2023. So what's driving this international growth trend, and will it continue? Well, several key factors are at play. First of all, the rapid economic growth in emerging markets in Asia has fueled wealth creation and investment opportunities. And second, supportive regulatory and corporate reforms in regions such as Europe and Japan have opened markets to both domestic and foreign investments. Importantly, over the near term, an improving global macro environment and synchronized central bank easing should create favorable conditions for private markets internationally. In the third quarter of 2024, for example, central banks implemented a total of 28 rate cuts, the most since the second quarter of 2020. And by the end of the year, we expect 80% of central banks globally to ease. That is up from roughly 40% in July. For private markets, lower interest rates in a stable macro environment could stimulate deal-making, boost exit activity, and support valuations. In fact, in Europe, during the second quarter of 2024, the anticipation of the ECB easing led to a significant rebound in deal-making. Deal-making increased 27% quarter-over-quarter sequentially, and the exit activity also rebounded, surging 90% quarter-over-quarter. 2024 is now shaping up to be the best year for private equity IPOs since 2021. In Asia, China announced a large round of stimulus measures in late September, which included rate-cutting measures, but also measures to boost M&A, such as lowering curbs on valuations. And speaking of valuations, private market valuations have increased generally across regions alongside the rebound in public markets, but some of the non-U.S. markets still remain relatively cheap. As of the second quarter of 2024, the median trailing 12-month EV to EBITDA multiple in Europe was 12.1 times compared to 13.1 in the United States. In the Asia-Pacific region, the median multiple was 10.1 times versus 13.3 in the U.S. in 2023. Given this rebound in activity and growth in private markets internationally, are private clients sufficiently allocated? Well, the answer in most cases is no. In Italy, for example, only 7% of private equity fundraising has come from individual investors, which is slightly below the European average. In Japan, investors hold roughly half of their assets in cash and deposits. And even the Japanese pension funds are still underallocated to private markets. Of the $2 trillion in public pensions, only around $42 billion, or roughly 2.1%, is allocated to alternatives, despite the current allocation limit of being around 5%. The bottom line is, we expect continued growth in private markets internationally, and there's lots of room for increased allocations in private client portfolios. And that's your one thing in private markets this week. I'm delighted to welcome our first guest today, Mathieu Chabran, the CEO and co-founder of Tikehau Capital. The company was founded in 2004. Tikehau Capital has impressively expanded over the past 20 years, now boasting 17 offices across Europe, the Middle East, Asia, and North America, with nearly 800 employees. The firm manages assets worth 46 billion euros and operates through 5 main business lines of private debt, real assets, private equity, capital market strategies, and tactical strategies. Mathieu, welcome, and thanks so much for joining me today.
Thank you for having me, Anastasia.
It's great to have you here today, and this year actually marks the 20-year anniversary of Tikehau. So I think we have to hear the story of how it was founded and why, and why did you feel compelled to found a private markets company back then?
So once upon a time, I was 28 years old. My partner was 30. We had started a career, at Merrill Lynch, in the city of London. And we were seeing, this emergence and development of asset managers, mainly coming out of the US, in Europe, tackling the private equity, the real estate, not yet the private credit market the way we understand that, today. Mm-hmm. And we went like, hold on, there might be an opportunity there, for us. And like any entrepreneurs, we started from scratch with, our little savings, from working in the city of London and a lot of friends and family, helping effectively launch the business. So a real entrepreneurial journey, like you have, many here in New York City, but not that many in Europe, I must say. And fast forward today, the journey has been one of entrepreneurship, with ups and downs. The GFC was a massive catalyst, not only for the asset class, but also for us as a platform. What we've been experiencing in the overall interest rates environment over the past 10 years has also been a massive driver. And here we are today. I moved here to New York 6 years ago to lead the North American expansion, and out of Asia, Europe, our domestic market, more recently the Middle East, we want to offer and best serve our clients and investors.
There's obviously a lot of other players in the industry, and I know that there's a secret sauce. There's a certain, approach that you have to investing that's important to you as you build the firm. Let's talk about that.
Well, I think that skin in the game, is the starting point of any entrepreneurial story, and all the more in the financial industry, which at times, is less the case. We've always been of the view, at Tikehau and with Antoine, that we were first and foremost principal. So not only, we remain, the largest, shareholder of the firm, but more importantly, the firm is always one of the largest investor out of the balance sheet, side by side with our LP, with our investors, with our customers. Mm-hmm. And that has made, a fairly differentiating model because it requires, significant asset base, equity base, which we have developed, over time. It requires, the willingness to take risks, but that's, the risk that we underwrite, for our clients. And when you do it well, you've got this very positive flywheel effect where, you compound your balance sheet side by side your clients.
And I'm sure very much appreciated by investors. So let's go back and talk about the global expansion. You started in Europe, and then your next step, I believe, was expanding in Asia. Right. And then now you're coming to North America. You've been here for some time. So tell us how that came about and what you saw in each one of these markets that made it compelling at the time.
You have to be strong in your domestic market, and strong both from an investment and from an investor support. And that's what we did, starting in France, but very quickly across, Western Europe, with this local presence that made and gave us a differentiating access to investment opportunities. And that's why, we took that first to Asia, because the emergence of the asset class was one that Korean investors, Japanese investors, Australian investors have been extremely active in, and we wanted to offer them a differentiating proposal to invest, in Europe, in credit, in real estate, in equity. They moved to North America because we wanted to do the same thing, but also start deploying, some capital and some differentiating strategy. There's no shortage of capital here, and there's no shortage of smart managers. But when you can put this, pretty unique frame where you tell your investors, we're fully aligned with you, we try to come with differentiating strategy. We have a motto, Anastasia, at Tikehau, which is create, don't compete. When we launched our secondary private credit business 4 years ago, we certainly pioneered that. The same way we pioneered direct lending in Europe. Obviously, many American managers had been doing that, in the US. It was emerging in Europe. But, we always try to come up with strategies that gives a hedge to our investors. Same thing on our private equity business. Our growth equity, when we launched energy transition, cybersecurity, those were, very differentiating proposal that today seems, flavor of the month. But at some point, that was very disrupting.
So let's talk a little bit about the global opportunity set as you see it today, and maybe what opportunities that is actually creating. As I look through the macro lens, central banks around the world are certainly shifting towards a rate cutting cycle. That's definitely been a reprieve for public markets. So I'm wondering, how does this trickle down to private markets, and what does this mean in terms of opportunities, private equity versus private credit, real estate versus other real assets, and maybe that does create some geographical preferences as well. Where do you see those opportunities?
Yeah, I believe that the structural opportunity of the private market has developed over the past 10 years in a pretty unique cyclical environment. So this drop in interest rate, this very facilitating monetary policy have driven, the emergence of the asset class. There was some distortion, in the market. Today, at 3, 4, 5% interest rate environment, and regardless of a cut in interest rates, we know that from an investor standpoint, the asset class has become totally structural in their allocation and in their portfolio construction. So today, the opportunity set for us is still very much around credit. It's credit because banks and capital markets have become much more constrained. Not any companies, not any entrepreneurs can access, the public bond markets. The bespoke financing solution that a local entrenched, asset manager can bring to these entrepreneurs and these either sponsor-led or family-owned businesses, are here to last. And from an investor standpoint, this compounding effect is a great opportunity.
You mentioned from the geographical standpoint, you're actually thinking about expanding or are expanding into the Middle East. What do you see there?
The Middle East has been, no surprise here, a growing pool of capital institutionally, and they've been extremely sophisticated in the way they've been allocating, to many strategies, worldwide. So we opened our Abu Dhabi office 2 years ago. We've been in Tel Aviv, Israel. We're expanding into Saudi Arabia as well, because they also want to see our portfolio companies going into their markets. Energy transition is a massive play. So not only, they want to obviously diversify away from the domestic economy, but they want us to bring back some of our portfolio companies to expand, their market share, to bring their technology. And that we've been seeing increasingly over the past 3 years.
You mentioned energy transition. I know decarbonization is a big theme for you. And speaking of creating something, I believe you are one of the leaders in actually bringing decarbonization private equity to the market. When I think about public markets, it feels like some of the ESG strategies or decarbonization strategies have lost a little bit of luster. Even though we had the credit incentives and the policy incentives. So how do you see this energy transition playing out in private markets?
What was a nice to have 6 years ago has become a must-have. From an investor's allocation standpoint, institutional or private, how many family offices we're working on are asking us to effectively offer them some solution to allocate their capital where there's an impact. And I'm talking mainly about climate, okay? All the gas emission, the CO2 emission, all these themes that people have been educated about today. They're like, okay, but what do you do, concretely? What do you do?
Yeah.
Where we're financing and investing with entrepreneurs who have a solution today, to reduce in low carbon mobility, in energy storage, but they need to scale this solution, not to meet some objectives, in 2015, but effectively to scale the solution today.
Right. And what has that experience been like, returns on decarbonization in private markets versus public? Because again, the track record in public markets, I feel like has been a little bit mixed.
Yeah, in the private market, you cannot hide yourself because it's what is the underlying operational growth, right? So the company we've been investing into tend to be 25, 30, 50 million EBITDA, businesses with a solution. And as we are harvesting the portfolio today, those companies have gone to, 90, 100 million EBITDA over the past 3-4 years on real underlying growth. So the play is not a levered play, is not a multiple expansion play, is not a financing play. We're not in the buyout world here. It's effectively investing with these entrepreneurs. They've got a solution. They need to build a factory. They need to buy a competitor, and then they scale, their solution.
Mathieu, my last question to you, speaking of growth, in the next 12 to 18 months, where are you focused? Where are you looking to grow?
So from a strategy standpoint, anything that has, a contractual interest, for as long as there is alignment of interest, that we like, so credit, real estate, infra, that we like. Geographically speaking, we believe that there is a massive opportunity in Europe after the various cycle, that we've experienced. But by the same token, for us, being a relatively new entrant, in North America, I can see, what we do in secondary private credit, which is an asset class that is developing very significantly, very immature market with the potential to grow. So, it's really on few fronts, but as long as you create this compounding effect, for your portfolio and your clients, there is significant set of opportunity.
Mathieu, thank you very much for this fascinating discussion. I really loved hearing about your thought process about expanding globally and finding opportunities globally. It also is great that you do think across asset classes of private equity, private credit, real estate, and more. So that's been really great. And of course, loved hearing the Tikehau story. And thanks so much for sharing that. And congratulations to you on 20 years of success and many more to come, I'm sure.
Thank you. And thank you for having me.
Today, in our Spotlight series, we're focusing on how technology is driving the global growth of alternative investments. I'm here in Lisbon, which is iCapital's key technology and operations hub, and we're going to discuss that topic with Vanda de Jesus. Vanda serves as iCapital's country head of Portugal. Vanda, thanks so much for having me here in this beautiful Lisbon office.
It's a pleasure to have you always.
Thanks so much, Vanda. And I really am curious to hear about iCapital International and, what's been the growth path, and specifically, how did the growth of our office in Lisbon materialize? Why are we here?
So first of all, it's a pleasure to be part of this big international family in iCapital. So we have 16 offices. We have 7 outside of US, Lisbon, London, Zurich, Singapore, Hong Kong, and Japan, and Toronto. And I'm very proud to say that Lisbon is the biggest of the offices outside of US with 230 people. And the reason why we started in Lisbon, it goes back 10 years ago when our founders, they wanted to solve our problem of alternatives and addressing this market. And they needed technology to solve that problem. Yeah. And they found that we have great engineers in Lisbon. And so they hired the team here that then grew, and that grew so fast that by 2020, there were already 60 people working for iCapital. And so iCapital bought that part of the company. And then we grew from the technology side, and we grew from there to the 230 that now has also operations in it.
So I know we're continuing to expand in Lisbon. And so what is so special about this place? What is iCapital and maybe others are finding here that's attractive?
So I think Portugal has a lot of ingredients that make it very special for this kind of companies. We are the 7th safest country in the world. We are also the 7th with the best quality of life. Mm-hmm. We have amazing infrastructures and connectivity. We even have some of the ultramarine cables of fiber optic. They are connected to Europe through Portugal from Google, Link. And of course, in terms of geographic, we are really in the center of the world. So we can connect to America, to Asia, even time differences. And this works with iCapital as well, because we have operations, as we said, in these regions. So we are also the country with the older borders, so very steady country in terms of where you are. So I think all of these, but then the most important thing is really the talent. We are the 3rd in Europe producing engineers. And also we have the 4th universities as top of Financial Times already.
And so, Vanda, let's pivot a little bit to the discussion of private markets and how that evolution is progressing here in Portugal, or maybe even beyond in Europe. What's been the interest in private market investing? How is it growing?
I believe particularly in the venture capital space. And that has to do with a lot of startups coming to Portugal. We also have a huge event that is Web Summit, mm-hmm. that is in Portugal for almost 10 years, that also brought a lot of attention to the startup ecosystem. And so a lot of investments, foreign investments are coming to invest in these startups. We now have 7 unicorns that are based with Portuguese talent. The amount of investment that has been growing 50 times in the last 10 years in these kind of companies. And another important or interesting figure is that the companies that are Portuguese technology based, they more or less worth 80% of our GDP, which means that technology is really a driver in our economy. And the other aspect of growing capital markets, it's probably also associated with the golden visas. Mm-hmm. So until last year, we could get a golden visa by investing in real estate, but then this changed in the last year. Right. And an alternative, and a great alternative, is through private equity investment. And I think numbers from last year were that investments reached like 125 millions, and more than 300 golden visas were attributed and awarded this way.
That's a really interesting change and a very constructive one for, private markets in Portugal. If instead of investing in real estate, some of the interested parties would have to allocate to a private equity fund based here in Portugal, which therefore would be able to have more dry powder to allocate to deals and, as we always talk about, support that real economy.
Yes.
And the other, takeaway for me is that technology is really, really a big part of the Portuguese economy. Yeah. Given your background in tech, you were at Microsoft for a long time prior to coming to iCapital, and obviously technology is a key focus for us at iCapital. And so let's talk about some of the key trends today, which is artificial intelligence, of course, automation, and also distributed ledger.
I really think that a company like ours, the way to drive these changes of technology, again, AI particularly, and also DLT, it's really helping and supporting the company and our customers to manage fear. And when I say manage fear, is that technology always brings uncertainty. And in this case, I think it's in three ways. In the leadership side, because you never know the risk of the investments, the FOMO effect, the fear of missing out.
Yeah.
But I think in our case particularly, we are doing it fantastically. We even hired very recently our new data office that will also bring AI. So we have been investing for a long time already.
Yeah.
Because we need, of course, vision data to scrap our documents and everything that we do already, but getting it to another level. The other thing on managing fear is about the employees. And it's not only ours, it's our customers. Because employees feel that they might lose their jobs, what will be the impact, and we have to explain how their jobs will be augmented and being much more interested on doing things that usually they could not do because they were doing operational works. And one of the things that I know in terms of metrics that we have inside is that applying, for instance, Copilot for developers, we have like productivities of 50% sometimes in using technology in that sense.
And so is that helping alleviate some of that fear, both from the leadership side and the employee side?
I would say so. That's the process that besides doing inside, we have also to do outside and help our customers to adopt. Because this is like starts with us and we are in the front row, but then we have to bring this to the market. So leadership, our employees, and then, of course, legal and compliance. We also have a new directive in Europe that is the AI Act that will also oversee the implementation of AI in the European companies. And so being on top of all of these trends, it's absolutely critical. DLT, of course, it's like a major trend that applied to our business model. It's absolutely key. Because you can simplify the connection, the distributed ledger technology. It's a much faster way to connect and to put and to distribute our funds. And we just announced some weeks ago that we had our first fund on DLT.
Indeed, a big milestone. Well, Vanda, thank you so much for sharing your insights and for helping us understand, what are some of the priorities for iCapital in international markets, and specifically here in Europe and specifically here in Lisbon. And great work is certainly being done both on the technology side and the operation side. So thanks so much for having me here. Thanks for your time.
Thank you so much.
And we'd like to hear from you. Send us an email at yourquestion@icapitalnetwork.com and let us know what questions are at the top of mind for you and your clients. I'm Anastasia Amoroso, and thank you for joining us today. See you next time on Beyond 6040.